Hello everyone and welcome to the class of economics. So today students, we will again start with chapter 2nd only. This is part 4th video, that is 4th video of same chapter 2nd. In the previous video we have finished domestic income, national income and so many other topics. Now in this particular video, we are going to start with factor cost and market price, which you will need for the calculation of national income. That is, for national income accounting, calculation of those concepts, you will need these kind of topics. So please concentrate well. When we talk about factor cost itself means cost, expenses, factor of production. That means whatever cost which we have incurred on factor of production, that is, it refers to amount paid to factor of production. Now factors of productions are land, labor, capital, enterprises. So all these are factor of production which is required by any firm, company, industries, manufacturing sector or service sector for the process of production or for further economic activities. So it refers to amount which is paid to all factors of production for their contribution, that is, for their efforts, for their work or contribution in the production process, that is, for the process of production, that is, producing the final goods from raw material, that is, converting the raw material into final goods, that is, production of goods or services. We require, a firm or industry requires some factors of production, that is land, labor, capital and enterprises. So whatever amount which is paid to these factor of production, those will be the expenses of the firm. So these are factor cost. Market price, now what is, as name suggests, market price, the price which is prevalent in market for all goods and final goods and services. So it refers to the price at which product is actually sold. That means these are actually market price, the price with which the product is actually sold in the market. The difference between these two is net indirect tax, that is, and which is included in market price, that is net indirect tax, which will be included in market price and excluded from factor cost. Now what is net indirect tax? Indirect tax minus subsidy, we will get net indirect taxes. So this net indirect taxes will be included in market price, whereas it is excluded or eliminated in factor cost when we try to find out factor cost. So where net indirect tax is the difference between indirect tax and subsidy, as I said, what is net indirect tax? It is indirect tax minus subsidies. Now what are subsidies? We will discuss. Indirect tax are the taxes which are levied by the government on production and sale of the commodity. That is, whatever production and sales takes place of any commodity or good. So whatever expenses or whatever taxes which are levied by the government, that is, which is collected by the government for the production and sale of the commodity, that is, whatever products and commodities which are produced and which are sold in the market, the government is actually trying to collect the taxes on these production and sale of the commodity. So those taxes will be called as indirect taxes, like sales tax, excise duty, custom duty, etc. And these are some of the indirect taxes. And subsidies, what are subsidies? These are actually a grant, that is a kind of cash grant given by the government to the enterprises. That is, subsidies are actually provided by the government as a grant, as a help to the enterprises to encourage production activities, that is, to encourage production of more and more goods of certain commodities. And these subsidies are actually given or provided by the government on very certain commodities, that is, to various enterprises, but on certain commodities these subsidies or financial grant which are provided by the government. And it is done to promote exports or to sell goods at prices lower than the free market price. That is, why government is involved in providing subsidies, or why government is giving this financial grant or cash help to certain enterprises, just to promote more and more exports to foreign countries or to sell goods, either to sell goods in the domestic nation or within the boundaries of the nation at a lower price than market price, or for more and more exports. So in India, we can see these kind of subsidies which are granted or which are given or provided in case of LPG cylinder. Okay, so LPG cylinder is sold at subsidized rates, and these subsidies are provided by the government. Okay, now according to this, when we say market price, how we can calculate market price? So market price can be calculated as factor cost plus net indirect taxes, whereby net indirect tax we can do so by indirect tax minus subsidies. That is, net indirect tax can be calculated by deducting indirect tax minus subsidies. Okay. Now how we can calculate factor cost? It is market price minus net indirect taxes. Okay, so what is market price? Factor cost plus in net indirect tax, whereas factor cost is market price minus net indirect tax. Okay. Now we can see or we can understand this with the help of certain cases or certain examples. First case or first example is like you can see that subsidy is given. Okay, somewhat when you are given a calculation to find out factor cost or market price. In the example, if subsidy is given, then to make out net indirect tax which is not given, so we can inverse the sign. For example, to find out like subsidy is given 100, so we assume that indirect tax which is not given as 0. Okay. So to find out net indirect tax, we will put the formula, that is indirect tax minus subsidies. As indirect tax is 0, we assume, because it is not provided or given, whereas subsidy is given as 100. So 0 minus 100, we will get minus 100. Okay. So net indirect tax in this case is negative. Now case second, where just the opposite, indirect tax is given, then net indirect tax is indirect tax minus subsidies. So we can assume that subsidy is 0, because here in this example indirect tax is given as 100, whereas subsidy is not given. So how we will calculate net indirect tax? It is indirect tax minus subsidy, the same formula, and we will have 100 minus 0. So the result we will get is 100. That is, what is the net indirect tax now? It is 100, which is positive. Okay. Now case third, here indirect tax and subsidy both are given. Okay. Now this is the case where both the things are given, like indirect tax is given as 100, subsidy is given as 80. Now again we will apply same formula, that is net indirect tax, that is indirect tax minus subsidy, and we will get 100 minus 80, that is 20. Okay. Now case fourth, again we will see some more cases. Now here what happened, if sales tax and excise duty are given, that is here indirect tax is not given. In place of that, sales tax and excise duty. Now what is sales tax and excise duty? It is actually indirect tax only. Okay. In indirect tax, these are the examples, sales tax and excise duty. So what we are supposed to do when clearly indirect tax is not given, but these two is given, excise duty and sales tax. So we are going to add both the things to get indirect tax. Okay. So sales tax and excise duty are given. By adding both, we can get the indirect tax. Example, like sales tax is given as 1000, excise duty is also given as 1000, and subsidy is given as 500. So to calculate net indirect tax, we are supposed to add the formula, that is indirect tax minus subsidy. So when in such situation, indirect tax clearly is not mentioned, but in place of that, sales tax and excise duty is given. So we need to add both of them and we will get the answer, and minus subsidy. So when we add sales tax plus excise duty, 1000 plus 1000, okay, and minus subsidies, that is 1000, and we will get 1500. Okay. So sales tax which is already given as 500. So the formula, by applying this particular formula, like sales tax and excise duty is given, we will combine, we will add both of them and we will get indirect tax. Subsidy which is already given as 500. So we will get the answer as 1500. Okay. Like case fifth is there, where we can see if net subsidy is given, directly subsidy is not given, but in place of that net subsidy is given, then to convert it into net indirect tax, we have to inverse the sign. That is to convert this net subsidy to net indirect tax, because we want to find out that. So what we will do, net subsidy we will find out as subsidy minus indirect tax. So example can be like net subsidy is given as 100. In this, the net subsidy is positive. That means when it is 100, it is not minus 100. So we can assume that the net subsidy is positive. When it is positive, which means that indirect tax is less than subsidies. When we say net subsidy is positive, it is given as 100. So we can assume or we can anticipate that possibly indirect tax is less than the subsidies, which makes net indirect tax as minus 100. Now second case is when net subsidy is given as negative. In the previous case we discussed that net indirect tax or net subsidy is given as positive. Now here it is already given in negative. So we can assume that indirect tax will be more than subsidies. In this, net subsidy is negative, which means that indirect tax is greater than subsidy, and which makes net indirect tax as 100. Okay. Now, after finishing those topic, I hope you understand the things, net indirect tax, how to calculate subsidy and how it is provided, how you can mold into that. Now, again we will focus on some other concepts of finding out national income. These are called as aggregates of national income. Okay. So, one by one we will do. The first is gross domestic product at market price, that is GDP at market price. In the previous slide we have discussed market price as well as factor cost. So, finally, when we say GDP at market price, it is defined as the gross market value of all final goods and services produced within the domestic territory of any nation of a country during an accounting year by all production units. That is, when we say GDP at market price, means it refers to all the final value of all the goods and services which are produced in the domestic nation or within the domestic boundaries of a nation in one financial accounting year by all the production units. So, all those final goods and services, their market value will be called as GDP at market price. Now, second we can say, in this same concept, how these things are referred, that is GDP at market price. What is the meaning of gross domestic product and market price? One by one we will go through that. Gross in GDP at market price, that is, what is the meaning of this G? G for gross. So, what is gross in GDP at MP signifies that depreciation is included. When we say gross, means charges of depreciation will be included here, that is, no provision has been made for depreciation. Okay. So, here depreciation is included, that is, there is no provision of depreciation here. In domestic in GDP MP signifies that it includes all final goods and services produced by all the production units located within the economic territory, that is domestic territory, irrespective of the fact that is produced by resident or non-residential Indian. That is, all the goods and services which are produced within the geographical boundaries, whether by the residents of the country or non-residents, that is NRI, will be included here in the GDP at market price. Third stands for market price, that is MP. It signifies that indirect tax are included and subsidies are excluded. So, what we see in market price, what we are doing, the indirect tax are included where subsidies are excluded in market price. It shows that net indirect tax have been included here, in which we are going to include indirect tax where we are subtracting or eliminating subsidies. Then product, like P for product. Now, product in GDP at market price signifies that only final goods and services have to be included. That is, all those final goods and services are included, whereas intermediate goods should not be included, just to avoid the double counting. That is, when we are making final goods and services possible, already intermediate goods are included in that. So, again if we will add the price or value of intermediate goods, then it will lead to repetitive counting, that is double counting. Okay. So, we want to avoid that. Now, some other concept besides GDP at market price, it is GDP at factor cost. Now, you clearly understand domestic product, what does it mean, and gross. So, moving ahead to GDP at factor cost. GDP at factor cost is defined as the gross factor value of the final goods and services produced within the domestic territory of a country during one accounting or one financial year by all the production units excluding the net indirect tax. That is, we are actually taking care of all the gross factor value of all final goods and services produced in a nation within the domestic boundary by all production unit, but we need to exclude the net indirect taxes in GDP at factor cost. So, what is GDP at factor cost? The market value of all final goods and services, but where we need to exclude or subtract net indirect taxes. The formula which we will get is GDP at factor cost is equal to GDP at market price minus net indirect taxes. Okay. In the next video, we will do some numericals based on this. Okay. Third is NDP at market price, that is net domestic product at market price. NDP at market price is defined as the net market value of all final goods and services which are produced in a particular nation, that is the domestic borders of the nation, during one financial accounting year by resident as well as non-resident of the country. That is all those final goods and services which are produced by the residential, that is normal resident, and as well as the non-residential Indian within one financial year, within one domestic border. So NDP at market price can be calculated as GDP at market price minus depreciation. What we did in GDP at factor cost, we are going to exclude, that is minus net indirect taxes. Whereas when we find out NDP at market price, it is GDP at market price minus depreciation. Okay, starting with the fourth topic, that is NDP at factor cost. When we say NDP at factor cost, it is net domestic product at factor cost, refers to total factor income. That is all those income which we are getting from factor of production. So all those total factor income which is earned by the factor of production, all factor of production, that is land, labor, capital and enterprises, rent, wages, salary, interest, profit. Okay, so these factor income which are earned by factor of production within the domestic territory of a country, within the geographical boundaries of a country in one financial accounting year, that can be termed as net domestic product at factor cost. And how we will get the formula? It is GDP at market price minus depreciation and minus net indirect tax. Now here we need to exclude depreciation charges also and net indirect tax also from GDP at market price, and then only we will get NDP at factor cost. Now here NDP at factor cost is also known as domestic income. That means another name for NDP at factor cost is domestic income. Why? Because everything, whatever factor income which is earned by factor of production will be taken care within the geographical boundaries of the nation only. So it can be called as domestic income or domestic factor income. Now next concept is gross national product at market price. When we say gross national product, okay, of course, which is something related to nation only, it refers to the market value, that is the market price or market value of all final goods and services which are produced by the normal residents of a country during one accounting year. Now here all those goods and services which are produced by a non-residential Indian, we are not going to include that. Why? Because it is strictly something related to nation only, domestic only. So it refers to all the market value of all final goods and services which are produced by the residents of the country during one financial accounting year. So formula we will get is GDP at market price plus net factor income from abroad, and it must be noted that the gross national product at market price can be less than GDP at market price. That is, the gross national product at market price can be sometimes less than gross domestic product at market price, and when net factor income from abroad is negative, that means in our country we did not receive any net factor income from abroad. In that case, the gross national product at market price can be less than GDP at market price. However, when GNP at market price will be more, that is, there are some situations when gross national product at market price is more than gross domestic product at market price, in case when net factor income from abroad we receive something, that means when it is positive. Sixth topic is gross national product at factor cost. After finishing gross domestic product at factor cost, this is gross national product at factor cost, which refers to gross factor value of all final goods and services. That is, it is not market value, it is gross factor value of all final goods and services which are produced by the, again, normal residents of the country during an accounting year. Each and every national concept when we see, make notice students, so you need to take care of all those produced, that is of goods or services, by normal residents of the country, not by non-residential Indian during one accounting year. So the formula we will get of GDP at factor cost is gross national product at market price minus net indirect tax. And what is net indirect tax? Indirect tax minus subsidies. In case when indirect tax is not given, what we are supposed to do? We can add all those taxes which are indirect tax. It can be sales tax, it can be custom duty, it can be excise duty. So we are going to add, which we have referred in the previous video. Now seventh topic is net national product at market price. Now here we are not talking about gross, it is net. Okay, that is national product, again national product at market price. It refers to net market value. It is not gross market value, it is net market value of all final goods and services which are produced by the normal residents of a country and during one financial accounting year. So again I request you please take care of this thing, that non-resident, all those production done by non-residential Indian will not be included in the concepts which are related to nation, that is all national concept. Okay. So the formula we will get is net national product at market price can be calculated as gross national product at market price minus depreciation. Okay, minus depreciation, and we will get the formula. And now last concept in this series is net national product at factor cost. Okay. Now it refers to net money value, not gross value, not factor value, but it is net money value of all the final goods and services which are produced by the normal residents of the country within the geographical boundaries during one financial accounting year. So the formula we will get is gross national product at market price minus depreciation and minus net indirect taxes. Now here in the previous topic when we discussed the net national product at market price, we have excluded depreciation only, but not net indirect taxes, whereas in this concept when we are discussing net national product at factor cost, we need to exclude depreciation along with that net indirect taxes. So net national product at factor cost can be calculated as gross national product at market price minus depreciation minus net indirect taxes. And it must be noted that net national product at factor cost is also known as national income. So this was all about today's video, dear students. So please go through each and every how to calculate these concepts, all net as well as gross. So go through the video again and again, and if you have any doubt you can ask me anytime. In the next video we will discuss, or we will go with certain numericals or examples. So it will be helpful for you to understand the terms. Till then, thank you, goodbye.